Again, my name is Perianne. I am the founder and president of the Chamber of Digital Commerce. Our mission is to promote the acceptance and use of digital assets and blockchain-based technologies. We represent over 200 companies that are investing in and innovating with blockchain and working with our members and the public sector, government, public policy makers. We're helping address some of the policy and the regulatory challenges impacting the growth of this technology. And we have had an absolutely incredible summer. It's a really exciting time to be working in public policy in the blockchain space. There has been a new awakening about the power of crypto assets and the potential of blockchain that is spurring international discussions about the future of this technology and how it is going to evolve into the global economy. But this conversation is certainly not without controversy. In order to really understand the importance and the promise of blockchain technology, we first have to understand the evolution of the monetary system and the current state of the macroeconomy. In the words of Hu Jintao, who was the president of China, the current international currency system is a product of the past. With the introduction of cryptocurrencies and global stablecoins, one of the most exciting things that I'm seeing happening right now is this open and public conversation about what is money. Money, or currency, is the lifeblood of an economy. It's what we use to measure the value of our labor. It's how we price products and services. It's what we use to buy necessities like food and our housing. Everyone is impacted by the monetary system, and you must have a healthy currency in order to have a healthy and functioning economy, which is why I think it is so important that everyone understands how money works. It was Aristotle who was credited with being the first person to define money. Aristotle's characteristics of money is a four-pronged test. One, it must be durable. It needs to stand the test of time. Two, it needs to be portable. You have to be able to take it with you easily. Three, divisible. You've got to be able to break it down into smaller parts. And four, having intrinsic value, or being value in and of itself. For thousands of years, civilizations have used gold and silver and other commodities as money, which is very, very different than the current system we have today of fiat. So how did we go from sound money to fiat? Well, 75 years ago, after World War II, the Allied nations came together to set the monetary arrangement for the post-war era. And they created what's known as the Bretton Woods system. I think it's really interesting just to review kind of what was all agreed to at that conference. And this year is the 75th anniversary of the Bretton Woods Agreement. What was established is that the price of gold would be fixed to $35 an ounce. The US dollar would be the reserve currency, and then all other countries would peg their currencies to the US dollar, and that they could legally demand gold from the US Treasury. As we know, this system broke down rather quickly. The United States started running trade deficits, and it became incredibly hard to maintain that $35 peg. So they kept increasing the price and changing the price, and by 1965, the transition to fiat began. By 1971, President Nixon closed the gold window, and then in 1976, the definition of US dollar in terms of gold was removed from statute. And it wasn't until the 1980s that all industrialized nations moved to fiat, meaning no backing. So it really was not that long ago that we were on a type of gold standard. So what's happened since then? To understand this, I'll just go through a few macroeconomic trends that I've been following. The first one being debt. because one of the tools that central banks have under fiat currency is, since the money is not pegged to a commodity, they can just print more when they need to. And boy, have they. Global debt is at unsustainable and systemic levels. The global debt today is at over $247 trillion. That's over 320% of GDP. So what that means is that we're spending 320% more than what we're producing. This is a massive issue, and this is not something that we can grow out of. So that red line there on the graph tracks the percentage of GDP, and as you can see, we have significantly more debt than what we are producing globally. And one of the byproducts of printing money is inflation, and world inflation is on the rise. The United Nations recognizes 180 currencies around the world, and 60 of those have inflation rates of over 5%. The Federal Reserve's target is 2, so there are 33% of all fiat currencies are significantly above the target inflation rates. This is an issue because if it gets out of hand, it can really impact the health of their money, of the currency. And inflation is a hidden tax that impacts all the people that use it for their daily lives. Just some other global trends I'll mention. Global economic growth is at paltry levels. We're also seeing an escalation of trade wars all around the world, and the number of banking crises are increasing since Bretton Woods. The monetary system today, it is not working for everyone, and there are global leaders that are pushing for something new, for something better. And most recently, Mark Carney, who is the governor of the Bank of England, he also is the former chairman of the Financial Stability Board. He, at Jackson Hole this year, proposed what he is calling a synthetic hegemonic currency, which is a global fiat currency backed by multiple central banks. Others have called for something to replace the US dollar as the world reserve currency, and this is not something new, but Mark Carney was the most recent to make headlines on this. Overall, the way I see it, as a global economy, we're over-leveraged. We have hundreds of trillions of dollars in debts, and central banks are not equipped to deal with these consequences. So adjusting interest rates and printing more money are not going to fix the current problems that we have. In the words of Albert Einstein, we can't solve problems by using the same kind of thinking we used to create them. It will take a paradigm shift. A paradigm shift will have to emerge in order to address the flaws in our international financial and monetary system. And I would argue that cryptocurrencies are the most well-positioned to be that paradigm shift, and in fact, they already are. And that blockchain technology is going to be a key pillar of the future of the digital economy. And Cyprus was really the first place to be tested to be that paradigm shift. As you all may remember, in 2013, Cyprus was going through a bailout with the European Union, and the future of the economy in Cyprus was quite uncertain. Were they going to exit the euro? What would that mean for the Cypriots? How would they be impacted? And in this moment of economic uncertainty, they started buying Bitcoin as a hedge. And that was the first time Bitcoin hit international headlines. And kind of just what I marked here is that was, the Cyprus bailout started in March, and then by April, you had this huge price spike in Bitcoin. And the rest of that was kind of history, and you guys know where we are today. But that was one of the key events that gained my attention into this space as an economist, that this alternative currency of Bitcoin could play a relevant part of the conversation during a bailout. and very much is part of the founding of this conference and this program at the University of Nicosia. And it's really an honor to be here at the ground floor to be a part of this journey and to discuss what the future of this ecosystem is going to look like. When we talk about blockchain, we often think of the financial services applications, and that's part of what I've been focusing on in my talk. However, I don't want to limit it just to that. Beyond financial services, many industries will be completely revolutionized by blockchain. Some of the other sectors that members of the Chamber are innovating in include cybersecurity, digital identity, intellectual property, healthcare, insurance, supply chain. According to research by Gartner, the annual business of blockchain is projected to be $3 trillion by 2030. And according to a research project by IHS Markit, 10% of global GDP could be stored on blockchains beyond 2025. We expect blockchains to add trillions of dollars to the global economy. There are many developed nations that understand the importance of this, and they're taking proactive steps to create an inviting environment for businesses to develop within their borders. Countries that want to have a leadership role in advanced technologies like blockchain need to take action and develop a plan in order to benefit from the opportunities that this technology will present. I'm going to take a few minutes to go around the block and highlight a couple of blockchain trends and initiatives around the world. The first would be in the EU, and we just heard from Ava a great overview of what's happening in the European Union, and it's really encouraging and exciting to see how proactive the EU has been. This graphic here I pulled straight from the EU's Blockchain Observatory and Forum's website, and they're very upfront that they want to cement the European Union's role as a global leader in this technology, and that's part of the purpose of why they formed the forum. As Ava mentioned, they've invested over 80 million euros into blockchain-related projects, and actually her number said 300 million by 2020 to be allocated to blockchain projects. The European Union wants to be a global leader in this space and is well on their way to not only developing what that plan looks like, but executing on it. The EU has a few things that I'll just highlight that I think are notable. A part of EU's blockchain strategy is that they fully acknowledge that there's all these different countries, and if each one of the EU member countries takes a different approach, that could cause problems from an interoperability perspective. So they've called for interop standards, and they've also put together a European blockchain partnership where they have 28 EU countries plus Norway have come together. They've signed a memo saying that they will share technical standards and regulatory information. So if you compare that to the United States, where we have 50 states, we have nothing like that in the US. So that global or that coordination from a regulatory perspective is super important for businesses that need to be compliant from jurisdiction to jurisdiction. And just of note, a quote from the Commissioner for the Digital Economy said that in the future, all public services in the EU will use blockchain technology. Also taking a look at China. China has a very different blockchain strategy than really any other country that we've seen. You can kind of summarize it in two different ways. One is that they're making significant investments in developing their own closed and permissioned blockchain systems, and then they're cracking down on public networks like Bitcoin and others. They are making significant investments. Blockchain is a part of China's 5-year plan. The People's Bank of China is expected to launch their central bank digital currency project. They've just released the name of it over the weekend. It will be called DCPE, or Digital Currency Electronic Payment. They want to be the first country to issue its own national currency, digital currency on a blockchain. According to the World Intellectual Property Organization, China has filed more patent applications on blockchain-based technology than any other country in the world. On their digital currency project, we found over 53 patents that they filed just on their digital currency project, so a significant amount of time, attention, resources, and they said they've been working on that project for 5 to 6 years. Of note, their People's Liberation Army has also disclosed that they're using blockchain, or they're examining the use of blockchain for gray zone warfare, which is espionage. And CCTV, their public-owned TV station, they're doing education of the public on blockchain, and they stated that the value of blockchain is 10 times of that of the internet. And quickly just noting Singapore. Singapore has taken a very open approach to digital tokens. According to research by Singapore University, digital token distributions eclipsed the value of initial public offerings within a developed economy with capital markets infrastructure for the first time just last year. So in their IPO market, there was $230 million raised in 2018 and $1.6 billion in token offerings. And the research noted that the result of this was because of clear definitions of digital securities from their regulators. So Singapore has really been a global hub for blockchain innovation and for digital token projects. And of note, after this event, I'll actually be headed to Singapore to attend the Monetary Authority of Singapore's FinTech Festival. So their government hosts a big FinTech festival, and they're taking a very proactive approach to invite companies into their jurisdiction to build on this technology within Singapore. Also, just note central banks. According to a study by the Bank of International Settlements, there's over 40 central banks around the world that are researching and experimenting with central bank digital currency. And I know that term's kind of funny because we do use digital currency anyways, but I think the intention that the BIS is saying is blockchain-based central bank digital currency. And then just of note, Christine Lagarde, the former managing director of the IMF, she notably said that virtual currencies might just give existing currency and monetary policy a run for their money. So I think it's quite interesting that some of the most renowned people working in central bank and global economic policy are recognizing the power of blockchain. And then just to highlight my home state, the United States, and where we are is very different and is really hard to compare the US to any other jurisdiction. The federal government is very fragmented. It's not like Singapore, for example, with the Monetary Authority of Singapore, which is their regulator and their central bank, kind of the central hub for everything. In the US, we have many, many different regulators, and they're all taking many different approaches, and that's causing a lot of challenges and regulatory uncertainty for companies that want to innovate in the United States. So for example, within the Treasury Department, the Financial Crimes Enforcement Network, in 2013 said that convertible virtual currencies will be regulated like currency for AML purposes. And then the IRS, which is also a part of the Treasury, which oversees tax, they said that convertible virtual currencies will be taxed as property. And then the Commodity Futures Trading Commission has determined that Bitcoin and others are commodities. And then, of course, the Securities and Exchange Commission is trying to make everything a security. So 4 different legal regimes just represented in this one slide, and we're only just beginning with the alphabet soup of agencies throughout the United States. At a national level, the tone is very much focused on enforcement. So going after the bad actors and enforcing the laws against them. Just to highlight, at the SEC, there's been 39 enforcement actions related to digital assets to date. And what's sad about that is the SEC has not released one piece of binding guidance on this same topic. So they're regulating solely through enforcement, which makes it incredibly risky for companies to operate in this space in a compliant way, and that's pushing a lot of innovation overseas. In addition, in Congress, there's been 36 bills introduced calling for a study to combat the illicit use of virtual currency. So again, the tone and the focus is very much on the negative, on the criminal activity, and there's really zero conversation about the opportunity cost. What is the benefit of this technology? How can blockchain improve our economy? How could it improve public sector services? How could it impact and improve our national security? These are conversations that are essentially absent. So because of that, part of what we are doing at the Chamber of Digital Commerce is we've called on the United States to, one, publicly support this technology, similar to how AVA in the European Union are here, but to also have a national action plan for blockchain, have a strategy, and coordinate that amongst the many different stakeholders within the United States to ensure that we have the legal clarity needed for businesses to operate in the blockchain space. Our national action plan has received recognition from many different members of Congress within the Congressional Blockchain Caucus and others, as well as some agencies. But we still have a long way to go to get this implemented. This is not where our work stops. We also have significant policy initiatives working with the regulators to get clarity on the jurisdiction of digital tokens. We're also helping companies with new AML laws and regulations. As you may be aware, there's been the AML regulations are changing in real time, and we have a whole set of programs to help companies understand how that's going to impact their businesses and help coordinate industry responses. So for more information about some of our resources, you can visit our website with the QR code. We just celebrated our 5th anniversary this summer, and it's been absolutely amazing just to see how far this conversation has gone, how far the industry has grown. We still have a lot of work to do, but it's truly an honor to get to be at the forefront of blockchain policy and working with innovators in this space as we impact and are reimagining the future of money and the digital economy. Thank you.